essential sacrifices to reach Php500,000 in the stock market in 2023. Here are the lessons to be learned from this blog. 1. Living below your means and sticking to a budget. Consistently cutting unnecessary expenses and adhering to a strict budget is essential for accumulating investment capital. 2. Delayed gratification and extra work for more income. Increasing income through additional work or side hustles while postponing immediate pleasures accelerates investment growth. 3. Overcoming the fear of risk and investing beyond a savings account. Embracing calculated financial risks by investing in stocks rather than relying solely on low-interest savings accounts is crucial for substantial returns. 4. Avoiding debt for instant gratification. Resisting unnecessary debt. 5. Cutting out unnecessary social spending. Reducing frequent social expenditures, such as dining out or entertainment, reallocates funds towards investment goals. The mindset shift, overcoming fear, and committing to investment. Many people hesitate to invest because they fear sacrificing their current lifestyle. They assume that building wealth requires giving up too much, leading them to avoid investing altogether. However, financial success is not about drastic sacrifices, but about consistency. Even with just Php500 per month, anyone can start accumulating wealth by following a disciplined plan. The key is to invest regularly, regardless of market conditions. The stock market follows cycles, and patience is essential. Instead of waiting for the perfect time, investors must develop the habit of consistent contributions. By shifting focus from short-term spending to long-term wealth, financial security becomes achievable. Financial discipline, living below your means and increasing income. Building wealth requires a fundamental sacrifice: cutting unnecessary expenses and adhering to a budget. Lifestyle inflation, the tendency to spend more as income rises, prevents many from investing. Instead of succumbing to social pressures to upgrade cars, gadgets, and vacations, investors should prioritize savings. Living in a modest home, driving an older car, or skipping luxuries can free up capital for investments. However, saving alone isn't enough. Additional income streams are necessary. Working overtime, freelancing, or learning high-income skills accelerates investment growth. Sacrificing time spent on leisure for skill development or extra work leads to greater financial stability and faster wealth accumulation. Taking risks, investing beyond traditional savings. Many Filipinos avoid the stock market, believing bank savings accounts provide security. However, inflation erodes the value of idle money, making long-term investing essential. While stocks fluctuate, they historically generate higher returns than savings accounts. The sacrifice here is overcoming the fear of market volatility. Investors must accept short-term losses and focus on long-term gains. Instead of viewing market downturns as threats, they should see them as opportunities to buy stocks at lower prices. Diversification across different stocks further mitigates risks. Letting go of the illusion of financial safety in exchange for real wealth-building potential is the key. Delayed gratification, avoiding debt, and unnecessary social spending. Consumer debt is a major obstacle to investing. Many people finance expensive purchases such as new gadgets, cars, and vacations on credit, thinking they can pay later. However, high-interest debt drains financial resources and delays wealth building. The sacrifice here is resisting impulsive spending. Instead of purchasing luxuries immediately, investors should prioritize financial goals. Social spending is another silent drain on wealth. Frequent restaurant meals, weekend getaways, and expensive entertainment reduce potential investments. Cutting back doesn't mean giving up enjoyment, it means being intentional. Investing wisely today allows for greater financial freedom in the future, making sacrifices now worthwhile. Emotional resilience, staying committed through market volatility. Investing isn't just about money, it's also about emotional discipline. Many investors panic when stock prices drop, leading them to sell at a loss. The key sacrifice here is resisting emotional reactions and staying committed. Stock market success isn't about timing the market, it's about time in the market. Holding investments through downturns allows portfolios to recover and grow. Investors must also learn to treat savings as non-existent until needed for investment. Viewing wealth building as a journey rather than a quick fix changes the perspective. Sacrificing immediate comfort for long-term gains ultimately leads to financial independence and stability.